Let's see. How should I set up my stock investing to avoid huge tax penalties? Penalties. I don't know if you're going to get a penalty for stock, but
Yeah,
what do
maybe
you
they
think?
just mean bills, how to avoid huge tax bills,
You know what?
make bad trades.
A lot of people think that the tax on it is a penalty. You
Feels
know,
that way.
you work, you work, you work, you do covered calls or something, you're going to have some ordinary income. You don't, if you don't trade a lot, and what I mean by a lot, like more than 750 trades a year, every day, 70% of the trading days, like more than $50,000 require, like that's how you support yourself. You're probably not a trader, which means you don't get to take tax deductions. So there are a lot of people out there that are investors by classification, and they feel like they're being penalized because they actually go backwards. In other words, they make enough that they'd be okay, but they get no deduction, so they end up having no tax benefit, and they end up eating all those expenses. So that
Mhm.
$25,000 goes away, especially if they go to events and are traveling
Yeah.
around. And
That was also one of the big changes with the Tax Cuts and Jobs Act,
what was
not
that?
being able to deduct those investment expenses.
Oh, miscellaneous itemized
Mhm.
went away, but trader status has been an issue since the 80s.
I'm not that old, just
They have
kidding.
a guy, they had a guy, the mayor, I think he made $15 million worth of trades, and they said, nah, you're not a business. And
Eh,
then, like, let's go back to the dog breeder, right? The dog breeder does 3 litters and they're a business.
mhm.
So you're like, come on, you know, you're just not being fair.
You actually
Uh,
just have to intend to be the business with the dog breeding. You can be very
it's
bad at it
crazy.
and
Yeah.
still get the
And if they
deduction.
reclassify you as a hobby, then they're just like, well, you can't take a loss.
So
Uh,
how are we getting deductions as a trader then? We're using that partnership
we're
structure.
using a partnership structure. You need to have a corporation and you need to have an LLC taxed as a partnership, and the corporation has to be a partner.
Hmm.
So that way the money flows into the corporation, and it's not like you could have a management fee that you're charging as long as it's not contingent on the profit,
I
and write it
guarantee.
off as a guaranteed payment to partner.
Mhm.
But you can't do the whole, hey, 30% of the gains I'm going to pay to the corp. But you can't write that off. They won't
Yeah.
allow you. But if the corporation owns 30% of the partnership, fantastic. It never hits you, so you're not
Mhm.
writing it off, right? It's going to the corporation. The corporation can then expense and pay all of its expenses. It's basically a family office.
Mhm.
So, and I'm encouraging people to think of it that way. The more I'm around larger family offices, the more I realize that's exactly how they operate. So you have whatever it is, your investments, but it's managed by a family corp,
Yep.
and they're running it. They have their board meeting, have your kids on it, and get together and say, here's our portfolio. Does everybody understand why we're making the decisions we're making? You can write that meeting off, 280A, you get some tax-free money out of it, cater it for all they care, get some tax-free food out of it, and bring those kids into the fold. I
Mhm.
know a lot of us don't want to. We're like, no, I don't want to tell my kids what I have because then they're just going to try to kill me. They'll be like, the living will comes back to haunt you. They're like, can I put the pillow over your face yet? Or you do the whole what they did, what I mean, Dexter.
You're so morbid.
I just think of that. Like, you don't want your kids like, all right, can I now? No, you want them to want you to live, right?
We watch a lot of crime shows.
Apparently. But no, Dexter, she had the key lime pie before
That's
you.
a crime show.
I know it's a crime show. Don't watch Dexter. It's very bad. Um, but you don't want your kids sitting there like, oh, this is a great boon when you're gone. You want to have it all set up and be talking to them
Mhm.
so
Plus, they
that
don't know how to do anything if you don't teach them while you're
the
around.
stats are freakish.
Yeah.
I forget who it was. They were talking about billionaires all meeting,
Mhm.
and they went through the stats of how many billionaires make it to the second generation. It's like
Yeah.
20%. That's
Sorry, Taylor and Travis.
there's people that just can't handle money. We don't give it to them.
Yeah.
Don't let them have it. Put it in trust. Let them get the benefit. Hey,
Teach
if
them how to manage it.
yeah, if you stink at making money here, or if you have a medical issue here, here's education, but you can't have the money and buy a Ferrari. I'm sorry, but you're in timeout, right? You don't get to just take it. buy a big house, make bad decisions. And I'm not saying that buying a big house is a bad decision. I'm just saying it comes with a large expense. Like you have property taxes and the insurance and all the utilities and all that. And a lot of times they don't consider that. And then 10 years later, they're in financial disarray because
Yeah.
they can't support the house. So um, anyway, fun stuff. If you like this clip of Tax Tuesday, then I invite you to join the actual show. It's every other week, and you can ask your questions and get them answered live by myself and my team. Just click the link.